Well, as a new business owner, you're probably overwhelmed of what all am I supposed to be keeping? What type of business record should I keep? Well, once you get started, my advice to you is just to go ahead and open up an account in the business name separate from your personal account. That you should keep all your business expenses coming out of that account, your personal expenses coming out of your personal account. Same with income that you get. Any type of income, whether you get payments by cash or checks or whatever, go deposit it into that business account and then write checks out of that business account. Same with credit cards or debit cards. You have a debit card on that account. A lot of times a business may have some problems getting a credit card to begin with, but you should be able to get a debit card to use on that business account. But you may still be out and about and may not have your business card with you, and you may need to buy something for the business. And that's fine to buy it on your personal account, but I would just then turn that in as an expense report to your own company and have the company reimburse you, just like you may have done when you were working for a larger company. But some of the things that you would need to keep as far as records would basically, if it's a piece of paper that is supporting any type of expense for the business, I would keep it in some orderly manner. It can be, some businesses keep it by vendor, so they may have a manila folder for company X and a separate one from company Y. But some keep them, well, here's everything that I have for the month of January, here's everything I have for the month of February, and so forth. Either way is fine, whatever best suits you. When come tax time, it may help to have January, February, March sort of thing, and then you can just bundle all those together by year, and then those are all the receipts and paperwork that support that year's tax return. But again, it might be easier if you're trying to find a receipt from company X to be able to go to their one folder and pull it out that way instead of looking through 12 months of folders. So again, just kind of how do you think? What works better for you? So why keep all these records? Well, one thing is to help monitor how your business is doing. I mean, you're going into business to be able to hopefully make a profit. Not all do, but that's the original intent, was to make a profit. And if you're not keeping records, you're kind of, well, how much money do I have in the bank account? And it's kind of the only way you have to know whether or not you're making anything or not. Well, that's possible. That's one possible way, but it's not necessarily the best. When it comes time to do your tax return, you can't just look at your checking account and say, well, I have $100 left over, I guess that's how much money I made. Well, that's not necessarily the way the IRS looks at it. So that's one thing, to keep up how well you're doing on your business financially. It'll help when you come to preparing financial statements that you may need for a bank. If you ever need to go out and take a loan, they'll ask to see an income statement that shows the income that you have from the business as well as expenses against that income. They'll also ask for a balance sheet that shows the things that you own, your assets, as well as any other debts that you may have, whether to another bank or even to yourself or other investors. It'll also show how much money that you've put in of your own as equity, kind of like if you went and bought stock on the stock market. It's similar to buying company stock of your own. Those records will help prepare those financial statements, whether you do them yourself through a software program like QuickBooks or some other program, or whether you hire an accountant like we are. If you're hiring us to do this for you, then we would ask for those records, and you need to have a good record-keeping system at home to come up with that. We wouldn't need all the receipts that you have, but you will need those receipts that, should you ever be audited by the IRS, they would like to see support for the expenses that you're claiming. Doesn't necessarily mean they will disallow a deduction if you don't have the receipt, but it will certainly help support it. You don't have to keep things for the next 40 years, but you do need to keep them as long as the tax return that the expense is supporting is possible to be examined under audit. That would be 3 years from the date it was filed, or employment taxes can go back as far as 4 years. But if you also purchase something like a computer or a desk or a piece of furniture of some type, and that is going to be depreciated over time, you would want to keep those receipts for as long as that return would be, the depreciation is being deducted on a return. So you may have to keep a receipt for a computer or something like that for 5 or 6 or 7 or more years. Well, how do you keep up with all this? You got different software programs available. The most common one for the small business arena is QuickBooks. There's also QuickBooks Online. There's also other programs. One called FreshBooks is similar to QuickBooks Online. There's a new company called Xero, Xero. And then even Mint is another easy way that you can keep up with some of your financials, or Quicken, or just the old-fashioned checkbook and Excel spreadsheet, or a piece of paper, notebook paper. Just as long as the IRS will accept any of that, as long as this helps support what amounts that you're deducting on your return. But I know there's a lot of information to keep up with here, and we are here to help you if you do have any questions. So just give us a call at SDA CPA Group.